So yesterday was a pretty good day for Virgin Week 3 traders. Personally, I went 3 trades, 2 wins, 1 loss for a total of 3R. But yeah, there were quite a few decent setups across the board. So I'll go over a breakdown of the trades I took, as well as a few other potential setups that I did not take for various reasons, which we'll go over. Yeah, and I'll also share some slight changes I made to my trading Bible and some further plans to refine the model a bit more. Okay, 1 second. All right, so for the most part, my trading strategy is still exactly the same. Still NQ and JC, looking at Asia, London, New York, 1 hour and the 1 minute. The main thing I've changed is I've adjusted my stop loss and I now put it just on the other side of the inverse fair value gap. Just because after looking at so many trades, I've noticed that when a trade is successful, it very rarely, almost never, just goes back to the other side of the inverse fair value gap. So doing this, we can have a bit of a tighter stop loss and just high probability trades. TP is still the same, obvious draw on liquidity or 2R. Yeah, no partials, no moving stop loss, no trailing, no break even. The other thing I changed is previously I would manually get out of the trade at the end of every hour, but now I am remaining in the trade at the end of the hour and I'm just gonna let it play out unless a new setup appears with a new POI and a new inverse fair value gap. But other than that, I'm just gonna let it play out because I have noticed in my testing, even after the hour ends, the price generally can still hit the draw on liquidity. So yeah, I'm just gonna leave it, let it play out. Those are the 2 main things that have changed. So yeah, again, the strategy is just wait for an hourly candle to close above Virgin Wicks. This is for a bullish example. Those wicks become bullish POIs, drop to the 1 minute, and look for price to close below the POI. Oh, this is another thing that's changed. Previously, I would wait for a candle to close back above the POI with a confirmed inverse fair value gap. Now, what I'm playing around with is front running the entry. So I would enter on confirmation of the inverse fair value gap, even if we are still below the point of interest. So that's what I call front running the entry. And I actually got a win doing that yesterday. So I'll show you an example. You'll see what I mean. And again, stop loss just on the other side of the inverse fair value gap. TP at draw on liquidity or 2R if liquidity is too far away. All right, let's go over the trades now. First, just a super quick 2-second summary, visual summary of the model. So yeah, we've got Virgin Wicks, which is just like this. Let me redraw this. Wicks that have not been closed through. Wicks that have not been touched, like that. That has not been touched, that has not been touched, that has not been touched. That has not been touched. Yeah, these are all Virgin Wicks. Bang. Okay, so we wait for Virgin Wicks to get closed through, which then creates our bullish point of interest. And then we want to drop down to the 1 minute to catch this hourly candle to get a 1 minute close below the point of interest and then an inverse fair value gap, and then we enter and enjoy the ride back up. Simple. All right, so this is one of the wins that I had, and this is what I mean by front running an entry. So let's go back to just before the hour. Okay, so 9:59. This is the CCT indicator by Master Cheat, by the way. I'll leave the links below. Okay, so here's what we look like at 10 a.m. So we just had this big candle close through this Virgin Wick and this Virgin Wick. So we're looking for a close below these POIs and then an inverse fair value gap confirmed, and that's where we enter our longs. Okay, so we've closed below. Now we're just waiting for an inverse fair value gap. So yeah, we dumped quite a bit. This is a crazy dump. I was watching this live. Okay, boom. There you go. So we have this. Oh no, sorry, not that one. This one. Inverse fair value gap there. Confirms close above. Right. Enter there. Stop just below the inverse fair value gap, as we said before, targeting 2-hour maximum. And yeah, this is a front run entry because previously we would have to wait for a close above the POIs. But what I've found very successful is even if there's an inverse fair value gap, you can almost treat the POIs like a drawn liquidity, like price will want to return there. So you can front run it and catch the trade before that. Ends up hitting 2-hour, really nice take profit before we ended up dumping more. So that was one of the nice wins. Let's go to this one now. All right. So let's go back to 8 a.m. Okay, so at 8 a.m. we had this big black candle here going all the way down, closing through this Virgin Wick, this Virgin Wick, and this Virgin Wick, which is why there are these red lines here. These are your bearish POIs now, because they are Virgin Wick levels that just got closed through. Now we want to look for a close above any of these POIs, and then an inverse fair value gap for our entry. So let's see how the hour goes. No close above yet, no close above any POI yet. There, bang, we finally get a close above. Now we just need an inverse fair value gap to confirm our entry. And bang, there you go. Our inverse fair value gap indicator tells us there is an inverse fair value gap here, as you can see. So you would then enter here on that confirmation, stop loss just on the other side of the inverse fair value gap, targeting 2R because there's liquidity down here. And then this one actually chopped around for a while, but eventually we do get it. Bang, there you go. 2R. So those were the two wins I took for the day. I'll now go over the loss I took. So this was in Asia on gold in the morning. Well, morning for me, but yeah, night for US people. So it was right on Asia open, which is 8 o'clock for me. Okay. So this was the Chad candle that I'm looking at. This one here in the middle, it closed through the wick next to it, this Virgin Wick, right? Creating this bullish point of interest, which is why there is that green line there. Now, we want to look for a close below. There, we get our close below. And then an inverse fair value gap entry. Boom. So there is your confirmed inverse fair value gap entry. So you would put your enter there, stop just below the inverse fair value gap. Oh shit, what happened? 1 second. Okay, yeah. So yeah, stop below there, targeting these highs for 1.8R. Let's see. Yeah, instantly stopped out. This one wasn't very kind, but that's right, you take the loss and you move on. So that was my loss for the day. And yeah, those are the 3 trades I took today. So 2 wins, 1 loss, plus 3R. But yeah, I'll also go over some other trades that were there that I did not take. There was this decent one that I saw. It was outside of the London kill zone. So this was after 5 a.m. So it was during the 5 a.m. to 6 a.m. candle. So I wasn't watching and I didn't take it. But I'll just go over the setup anyways, because I do know one of my followers took this one and they told me about it. Okay, so we've got this giant candle here, this 1 hour candle. Let me get rid of all of these. Creating this POI because it closed over this Virgin Wick, right? So that's your line you want to play with. So wait for a close below, Nothing yet. Boom. Okay, we'll get a close below. Now all we need is a inverse fair value gap. Nothing yet, nothing yet, nothing yet. Here is your inverse fair value gap. So you finally get your close above it there. You can put your stop just below the inverse fair value gap, targeting this drawn liquidity, so 1.75R. And you pretty much get it right there, bang. Yeah, but like I said, I didn't take this, but yeah, pretty clean trade. Not bad, not bad. Yeah, there were a few other ones on gold that I just want to go over. So, oh yeah. So there was this one during London. I didn't take this one. I don't think I was watching the charts at this time. But yeah, this is what I mean by trades can still hit their drawn liquidity after the hour ends, which is why I'm leaving my trades at the end of the hour now. Okay, so let me just move this. So we've got, okay, so this candle here, this one we're looking at, closes above the candle before it, creating this bullish POI, okay? See, right there. Turn this back on. Looks like it also closes through another one. Let's see. Yeah, so it also closes through this one all the way back here. Bang, right there. Which is why when we drop down to the 1 minute and turn back this indicator on, you can see POIs there. Anyways, okay. So these are the POIs we're playing with. We want to look for a close below and then an inverse fair value gap back up. So nothing yet, nothing yet. Boom, okay. So we've closed below this first POI, and this would be the fair value gap you want to close through for a confirmed entry. Boom, okay, there you go. Indicator prints it, and so you would enter there, stop just below the inverse fair value gap. You can target these highs if you want, but of course I like to cap it at 2R. And yeah, this one chops around for ages. Hour ends here, 5 a.m. So that's why the indicator stops printing the POI levels. But as you can see, I'll just play it out. This one, after a while, eventually hits the drawn liquidity. There you go. Takes out this high. So the target was correct. It just takes a while, which is why, yeah, consider leaving trades open at the end of the hour if you think they will hit the drawn liquidity. But yeah, I didn't take this one. I missed it. Let's see, what else was there? I think there was one more on gold yesterday. Oh yeah, that's right, this one. Okay, so this was during New York yesterday, 9 a.m. So yeah, we had this crazy push down. Where am I going? Yeah, so massive candle, closing through a bunch of virgin wicks. If I go to the 1 hour, yeah, look at that, so many. So this one, this one, this one, this one, this one, this one, this one. Yeah, just a bunch of virgin wick levels. So a very strong move down. So we can expect a lot more downward momentum. And there's even a cluster of bearish POIs there. So good place to look for your entry model. I was watching this one, but yeah, I never saw an inverse fair value gap, so I never got in. But apparently, so I'm trading the COMEX MGC futures chart, but apparently one of my followers showed me this on just the standard gold chart. There was a fair value gap, I think around here, like somewhere here. So yeah, every broker and every chart is going to be a bit different. So my one personally, I didn't see an inverse fair value gap, but I think on the normal gold chart, there was a fair value gap here. So I do know some people took this one here, enter there, stop loss, you can put it somewhere around there, targeting this liquidity down here. Yeah, but yeah, 2R, bang, this was a super clean dump, and it just kept on falling even further. So yeah, I missed this one because, yeah, like I said, my chart did not have a fair value gap, but some people saw it. So yeah, the model played out really nicely here as well. So that was all the recaps for the day. Really nice day for the model. Yeah, a bunch of wins, bunch of potential wins. I'm happy with how I went, pretty good day. And yeah, just wanted to quickly go over something else I'm working on as well. Yeah, this is just some testing I'm doing. So, okay, we'll go over this one first. So I'm just trying to play around with having a bias. I mentioned it in the last video where I was testing out a bias of not longing when we had too overextended high above the last 4-hour candle, or not shorting when we were too low, below the low of the last 4-hour candle. Decent results, but nothing groundbreaking yet. So I'm not really implementing this yet. Still playing around with it. Still might explore other ideas. But the main thing I wanted to share is, yeah, like I said, front-running entries. So entering on confirmation of the inverse fair value gap, even if we are still below the bullish POI, seems to be really good. So 51% win rate compared to a 37% win rate when you do not front run. So it seems like waiting for confirmation of closing back above the POI is actually hurting your win rate. And it's actually better to enter as soon as you get that inverse value gap. But yeah, like I said, it's pretty small-ish sample size. So I'm going to continue to pump out more testing just to get a more robust outlook on this theory. But yeah, so far, this is enough for me to start live trading front running. And yeah, so far so good. But yeah, these are the current projects I'm working on in terms of backtesting, and I'll continue to update. Thanks for watching. See you later.